Assalamu alaikum wa rahmatullahi wa barakatuhu. Thank you for joining us in this webinar yet again. Alhamdulillah, this is our 10th webinar in our series. So that means it has been 2.5 months that we are doing this, and your participation is only increasing. And that is encouraging us to keep giving these free sessions to you so that the entire Islamicly process becomes quite transparent and you get more and more confidence to subscribe to Islamicly and follow Islamicly for all your Sharia compliant investment needs, specifically in the investments that you are intending to make or you are already making in the equity space. The equity markets are still very exciting. We don't usually comment on that. I'm not an expert on it. A lot of people have also asked us that do we recommend sub stocks? We don't do that because we are not an accredited or a registered investment advisor. And we like to keep our advisory separate from the Sharia compliant status that we give. Also, just to give you full disclosure, on the Islamicly app and the entire research team that is involved in the Islamicly research in terms of assessing whether a stock is Sharia compliant or not, none of us, as of now, have any investments in any of those stocks with change compliance, or in general are not actively involved in investments. So our screening is absolutely independent of whether a stock is going to go big or not. Last week we did a masterclass with a lot of people, and Alhamdulillah, we also gave out certificates to all the people who attended it in terms of what is Sharia compliant screening. And it was a big session. It went on for almost 3 hours, and we got a lot of good feedback as well, that the session was very well attended, as well as a lot of people got a lot of things to learn. Thank you for all the feedback, and this is only encouraging us to do more and more. This week, we are going to focus on the financial screening aspect. We'll go into a little bit more detail into that. Plus, we will also cover in detail about dividend purification, a couple of scenarios about dividend purification. If time permits, inshallah, we will go ahead and give you more examples also on how to do dividend purification. And as usual, we will end this webinar with taking questions. Questions can be specific to what I have spoken about in this webinar, or it could be about anything in general about the app, or it's completely open Q&A session that we always do. And do not worry, I will always ensure that I answer from the first question till the last question. So keep putting your questions right away. And as we go along, if I think there's a question which requires to be answered immediately, I'll answer that question immediately. But usually what is best is we take all the questions at the end so that we can answer them one by one. And last week, we saw a couple of attendees of the webinar answering the questions of the other users. That is very encouraging. Please do that so there's healthy debate inside these webinars. And I hope these sessions are helpful for all of you. If you feel that these sessions are good, these sessions are helpful, these sessions help you understand what Islamic equity investments is, if these sessions help you, give you more transparency about what Islamicly is, and the Islamicly app is giving you more information, then please do review us on the app stores, on the iOS stores, as well as the Android stores. And if you have not subscribed, please do subscribe and encourage us. There's a small question which has already come up from Brother Shahid. It says that it's free brokerage charge any. Brother Shahid, we are not a brokerage app. We do not allow investments through the app. Islamicly provides you the entire information as to what are Sharia compliant stocks and which aren't. It tells you it tells you which on a continuous basis whether a stock continues to be Sharia compliant or not. It gives you more details as to what are how a stock is Sharia compliant. It tells you whether it passes the sector screening. It tells you whether it passes the accounting ratios. On the web version, we have more details available in the sense that on the web version, we have more details as to if a stock is changing from compliance to non-compliance or non-compliance to compliance. When did that change happen? We tell you that on the web version. On the web version, we also have a specific feature which tells you what is the compliance risk factor of a stock. That is, if a stock is borderline in terms of being compliant or non-compliant, what is the risk that it is going to change its compliance? Is it going to change its compliance soon or in the foreseeable future? We do not see, basis the past information that we have about pricing, about the way the stock has behaved, whether the stock is going to change compliance soon or not. Basis that, you can decide whether you want to invest in the long term or the short term in that stock. So the web version has a lot more features. The web version is also very soon going to have a more elaborate holdings feature, wherein you can add the same stock into multiple portfolios. This feature is 99% ready, as we have been saying for probably 4 to 5 weeks now. This is now 99% ready. It will go into testing very soon and will be released very, very shortly, but only on the web version, not on the app, because it's not possible to do all these things on the app. So if you are only an app user and you'd like to upgrade to the web, now is a good time to upgrade to the web. There are discounts available for people who are existing subscribers of the app, and if you want to upgrade to the desktop version or the web version, you can do that at a discounted price. It's already inbuilt into the app. So do check out the web version. There are a couple of videos as well if you want to have a look at it before you want to subscribe. Look at the videos available on our website so that you know what features are available on the web version. Farhan Mir says that can we get a recording of this webinar? All recordings of the webinar are available on our YouTube channel, which is also called Islamicly. Do have a look at all the previous webinars are alhamdulillah already uploaded on Islamicly YouTube channel. We endeavor that by Monday, today is a Saturday, by Monday the recording is available, and you will, if you're subscribed to the YouTube channel, you immediately get a notification that this webinar has a video recording of this webinar is already updated. If you have missed the previous masterclass, where we spoke about the entire Sharia screening criteria as to how we look at alcohol, how we look at port, how we look at interest income, how do we compute, how do we ascertain whether a company passes the business sector screening, the recording is available on the Islamicly YouTube channel. Please go there and have a look. It's a longish video. You can view it whenever you have some time. Do leave your comments as well in the comment section as to how you find that and stuff like that. I will inshallah take all the questions as we move along. And let's start. So I'll start sharing my slides now. And let's get ahead. Do post your questions. We will answer all the questions at the end of this webinar. Again, wa alaikum assalam to all of you who have sent me assalamu alaikum. Thank you for joining us. We have alhamdulillah very good participation now. So let's get started. Yep. I'll just confirm from my team if they can see my screen. Yes, we have a confirmation from my team that my screen is visible. Sometimes these technology things take some time. Yes, I will bring this down. So what we're going to discuss today is Islamically financial screening and dividend purification. So last week, as I said, we covered the business aspect of the Sharia screening criteria, wherein we discussed all about the business side of Sharia compliance. The second aspect for a stock to become Sharia compliant is it has to pass the financial screening ratio. And then the third aspect is the dividend purification ratio. Let's see what the agenda is. So we will quickly recap for all the people who did not attend last week's webinar. We will very, very quickly go through all the slides so there's going to be a recap of Sharia business sector screening criteria. Then we will get into the Sharia financial ratio criteria in detail. Then what is the dividend purification ratio, whether it is done on capital gains or it is done on only dividends received. Then we will also get into how to purify dividend income using Islamicly App. Then we'll also give you a demo of the purification thing on the Islamicly web. And then we will have the Q&A session. So let's get started. We're already 10 minutes into it. As I said, I will quickly recap what we discussed. So Sharia screening process consists of two levels. There's the business sector screening and the financial ratio screening. A company to be qualified as a Sharia compliant stock needs to pass the business sector screening as well as the financial ratio screening. Now, what are the Sharia screening criteria for sector screening? The following sectors are considered non-permissible. So if a company gets revenue from alcohol, conventional financial services, that is interest-based financial services, gets revenue from gambling activities, gets revenue from selling pork, gets revenues from pornography, advertising income. Advertising as an activity is not against Sharia compliance. We will discuss this more as we go along. But advertising means non-permissible advertising techniques or non-permissible content in the advertising sense. So media and adult entertainment content or a company which derives revenue from media and adult entertainment stuff is considered non-permissible. And then for companies which are involved in gold and silver trading or mining, if they sell their production or they trade in a manner in which they hedge their prices, that is also considered non-compliant. We'll quickly go through stuff. So companies deriving revenue from all forms of alcohol are considered non-permissible. So regular stuff like brewers, distillers, wineries, packagers, wholesalers, transporters, sellers, including pubs, bars, etc., are considered non-compliant. Also, producers, bottlers, suppliers, retail chains, and all other support functions serving and deriving revenue from the alcohol industry is considered non-permissible. Moving on. So specialized, now we're discussing a specific examples. I will go very quickly on this. For if you want a more detailed discussion, you can refer to the previous webinar. But just to have a recap, we're doing this. So specialized crop producers which grow and sell crops exclusively for alcohol production. For example, a brand farmer growing a specific variety of brand. So if he is growing brand which is generic, it can be used for any other purpose also, then he's compliant. But a brand farmer growing a specific variety of brand and sells its produce to an alcohol manufacturer, that revenue for the brand manufacturer will be considered non-compliant. So the commodity he's selling is compliant, brand is compliant, okay, wheat, bran, barley, whatever you call it, is compliant, but he manufactures it specifically for alcohol industries, then that revenue is considered non-permissible. So breweries, wineries, again, capital goods manufacturers, a company which manufactures a custom-built machine or automation engineering company manufacturing a brewing or distilling machine, revenue from such machinery sales will be considered non-compliant. So although you're just manufacturing the machine, right, you are in the business of engineering, you're in the business of manufacturing machinery, which is a compliant business. But if that machine is specifically designed or specifically made for manufacturing alcohol, then that revenue is considered non-permissible. Another example is bottles. So bottle manufacturing companies making specially designed bottles used for packing alcoholic beverages, that's non-compliant. I'll move on to the second point. So packing material manufacturers producing alcohol packing, that will also be considered non-compliant. Definitely resellers like bars, pubs, clubs will be considered non-permissible. Also, entertainment venues which are serving alcohol. So in their financials, we will have to figure out what is the percentage of alcohol sales that they get. For example, an amusement park operator selling alcohol in his food courts or stalls. sports clubs selling alcohol, restaurants selling alcohol, supermarket and departmental stores selling alcohol, so that revenue will be considered non-permissible. Again, sugar manufacturers producing alcohol as a byproduct. As a residual product of sugar, molasses are produced. This could be sold to the alcohol industry and used in the distillation process. Revenue from such sales will be considered non-permissible. So if a sugar manufacturer sells its byproduct, which is molasses, to an alcohol manufacturer, then that revenue is considered non-permissible. If he's selling that or he discards that, right, the revenue from manufacturing sugar will be considered compliant. I'll skip this. This is a pretty detailed one. Let's move on to financial services. So conventional financial services are definitely considered non-permissible. Conventional financial services means financial services companies which are involved in interest-based lending. So the commercial banks, investment banks, mortgage lenders, mortgaging agencies which do not themselves do mortgages, but they facilitate the transactions. They are also out. So capital markets, so stock exchanges, conventional stock exchanges are also non-compliant. Investment in equities, which is Sharia compliant, is permissible, but the stock exchange is considered non-permissible because it allows such companies to be listed which are non-Sharia as well. It allows such contracts such as futures, options, and tons of other stuff which are Sharia non-compliant. But if a stock exchange is doing all the activities of a stock exchange in a Sharia compliant manner, then a stock exchange as a business activity is considered compliant. So conventional stock exchanges as a business is considered non-permissible, but investment through that stock exchange in equities which are classified as Sharia compliant and the manner in which you trade those equities are complying to Sharia rules, then it is perfectly permissible. So there's no problem with that. So don't get confused between the two. Specialist finance houses are also considered non-permissible. Again, there's an insurance agencies, insurance brokers are also considered non-permissible. The exception to this is Islamic banks. So Islamic banks are considered Sharia permissible. You can invest in the stocks of Islamic banks, Islamic financial institutions, and Islamic insurance companies. Now, how do we define if a company or a financial services company is Sharia compliant? We have these 4 criteria, and we're very, very glad to inform you, as I said in the previous webinar as well, that it is the Islamicly team which has done the research extensively and come up with this criteria, which now has become a global standard. We were the first to do this research and tell the Sharia board that such Islamic banks should be considered as Sharia permissible, and that we defined the criteria. So we have also contributed to development of the criteria. Let's look at the criteria. So Sharia committee. So the above businesses are those which have a Sharia committee or Sharia scholar who supervises all business activities and products of the company and certifies the same as Sharia compliant. Secondly, all products of the company are certified as Islamic, either by an internal Sharia scholar or board of Sharia scholars or by an external Sharia advisory firm with a named scholar in it. All investments and all non-operating activities of the company are Islamic. The company must pass all accounting-based trainings. We have removed this 4th point because the Sharia committee wanted to give promotion to such companies. That is, if they have a Sharia board to supervise their activities, all of their incomes, that is operating and non-operating, 100% of all their incomes from whatever source is Sharia compliant, and it satisfies that criteria. Third, all its investments as well should be Sharia compliant. If it satisfies all these 3 criteria, then it is considered an Islamic investment company, or it is an Islamic bank, or it is an Islamic financial institution, or an Islamic insurance company. Satisfying these 3 conditions, it is considered Sharia permissible. Here, it does not have to pass the financial ratio screening. Moving ahead, the next criteria that makes the stock non-permissible is gambling. So lottery and casino operations, online gambling, gambling software companies, online gaming companies which give out gaming software are also non-compliant. The other criteria is pork. I need to move quickly on this. So business activities which involve breeding, rearing, slaughtering, processing, packaging pork products are considered non-compliant. So essentially, the entire gamut of operations involving the pork industry is considered non-permissible. Now, where do we find these kind of things? So restaurants selling pork-based product, post-baked dishes, supermarkets selling fresh or frozen pork products are considered non-compliant. Livestock companies dealing in pork-related activities are considered non-compliant. Animal feed, so companies which manufacture specialized feed for the pork industry is considered non-permissible. So the other criteria is pornography. Producers, promoters, and marketers and publishers of all types of adult entertainment, explicit content is considered non-permissible. Businesses producing, printing, distributing, or marketing pornographic material are considered non-permissible for investment. Thirdly, this could be over any media. So media is not a constraint, so it could be print, visual, or audio. Content which is abusive and offensive is also considered non-permissible. So companies which are involved in online marketing, bookstores, media firms, production houses, sexual content magazines, gaming companies, because they may have so gaming companies producing such gaming formats wherein the characters may use abusive language or may have sexual themes. Such games are usually classified as suitable for adults. Revenue from such games is considered non-permissible. And cable TV operators. While I am at it, recently we have made electronic arts as Sharia non-compliant. So Electronic Arts is a company which produces the famous game called FIFA. We have made this company Electronic Arts non-compliant because if you see recently, a lot of regulators are wanting to classify this game, the FIFA 18, 19, 20, as a game which is akin to gambling. I mean, you can just do a Google search. Recently, the parliamentary panel in the UK have convened a committee meeting wherein they are wanting to classify FIFA, the game, as Sharia non-compliant. Wanting to classify the FIFA game as a gaming company or a gaming format game or a game of chance. Hence, we have also classified this as a non-permissible company because the revenue from the FIFA game for Electronic Arts is in excess of about 15% on an average over the 3 years. Hence, we have classified that company as non-compliant. That's the level of detail Islamicly gets into to get you the most updated, the most well-researched Sharia compliance information of equity stocks. So rest be assured that everything, whatever is there on the Islamicly app, is absolutely updated, is looked into with such detail, and that's the assurance that we give to all our users. I hope you appreciate this. Moving on, so there's tobacco, which is also considered non-permissible business activity. So producers, processors, packagers, retailers of tobacco products are considered non-permissible. Businesses involved in growing, processing, packing, marketing, and retailing of tobacco products are also considered non-permissible. So thirdly, companies involved in doing research on behalf of tobacco companies or funded by them are also considered non-permissible too. So which are these companies? These companies could be supermarkets and retailers selling tobacco products, R&D labs involved in tobacco research, so companies which are in the R&D segment doing it for the tobacco industry will also be considered as non-permissible. Paper manufacturers selling specially designed paper for cigarette rolling or filters or anything else in the tobacco industry is also considered non-permissible. Definitely e-cigarettes is also considered non-permissible. Moving on to advertising. So this is also considered non-permissible due to the content used in advertising. As I said, advertising as a business activity is considered Sharia permissible, but the content that goes into advertising is considered non-permissible. So the tricky areas are advertisers of pork, alcohol. So essentially, if you're advertising anything which is non-permissible, whether you use an animation which is considered to be Sharia compliant, but the subject of advertisement is a non-compliant product from a Sharia perspective, then the revenue from such advertising is considered non-permissible. Secondly, producers, designers, broadcasters of non-permissible advertising content is also considered non-permissible. Textual advertising is permissible. So let's say there is a textual text-based advertising. Like for example, Google. You go to Google, you search something, it gives you text-based advertisements. The first 3 things, the first 5 things. Those are considered permissible if the ad is not about a non-compliant activity. If the ad is about a non-compliant activity, whether it's textual, it's video, or any other format or audio format, it will be considered non-permissible. The last point, digital ad platforms which do not produce content but have ethical filters are permissible. So stuff like Google is considered permissible. Stuff like Yahoo is considered permissible. Facebook is considered permissible. For more details, there's a blog on our website, as well as on the article section of the app, that why are digital social media companies which are doubling up as advertisement companies considered Sharia compliant. Do have a look at that for details. Moving on, media and entertainment companies. So producers, distributors, broadcasters of music, movies, television. So basically all adult content, non-Islamic content things are considered to be non-permissible. I'll move on. And the last criteria is from the viewpoint of Sharia. Gold and silver are a medium of exchange and as such cannot be sold forward. So companies which are primarily in the business activity of gold and silver mining, although the primary business activity of gold and silver mining companies does comply with Sharia principles, these companies are not permitted to sell their gold/silver stocks forward for hedging purposes. That means if you are a gold miner, or if you're a gold trader as a company, or if you're a gold or a silver miner or a silver trader, this is applicable only for gold and silver and not for copper, not for anything else. If you are a gold mining company or a silver mining company, you are supposed to sell or trade in that commodity on the spot prices. If you do a hedging of that, let's say for example, you say that I am going to sell 20% of my produce to a specific company at a specified price, right? And that specified price is not a derivative price on spot. It's given. Like I'll sell it for $400 per ounces or $600 per ounces. It is considered as hedging revenue from this activity or from this contract. If it exceeds 5% of the total revenue of the company will be classified as will fail the sector screening. So gold and silver mining is a Sharia permissible activity. Gold or silver trading is a Sharia permissible activity, but you should sell it on spot prices. Let's move on. Now, what is the screening threshold? Everybody knows this. So revenue from all of these non-permissible segments should be less than 5%. Essentially, there is a tolerance threshold, because in today's world, if we do not have a threshold, then a lot of companies will go out and the universe of investments available for Islamic investors will be quite less. That does not mean that the Sharia board or the Sharia scholars explicitly encourage these companies to do non-permissible activities up to 5%. No, it does not encourage them to do such non-permissible activity. But since we are in a world where our industry, that is the Sharia compliant equity investment industry, is just growing. As you know, I have mentioned earlier as well, the equity investment market globally is trillions of dollars worth. Sharia investments or Sharia compliant equity investment market is just about $100 billion. The actual market of the market capitalization of the global markets is in trillions of US dollars, but Sharia compliant investments that has happened in these markets is just about 100 billion. So we are a very, very, very small minority. When we are a very small minority, how can we say that we will invest only in such companies which are 100% pure? We've done that research as well. Globally, out of the 35,000 stocks that we cover, we have seen pure stocks. That means zero income from non-permissible activity. All their financials, that is their assets and their liabilities, is 100% Sharia compliant, and they have a Sharia board as well to manage their operation, to oversee their operations. There are less than 300 companies as of today amongst the hundreds of thousands of companies globally. And in many countries, like for example in the US, we haven't come across a single company. In most Western markets, we haven't come across a single company. These less than 300 companies are there in the Middle East. Some are there in Indonesia as well. Some are there in Malaysia as well. Some in Pakistan and some in Bangladesh as well. But that's about it. So hence the Sharia scholars decided that we can have a tolerance limit, that up to 5% if a company derives revenue from any of the previously discussed non-permissible activities, it will be considered Sharia compliant from a business sector perspective. Now this 5% should come in from only operating activity. What I mean to say in this is that if a company derives revenue from active business operation, which is non-permissible in nature, the stuff that we discussed previously, if that exceeds 5%, then it becomes non-compliant. But if a company derives passive income, let's say for example interest income or investment income from a Sharia non-permissible activity, but it is not the core business of the company, then we do not consider this in the threshold. Okay, so the 5% non-permissible income considers only active business areas or operating business areas. So I've already discussed this. I've already discussed this as well. Okay, this is the core area that we are going to make a discussion on today. All right. So financial ratio compliance consists. So once a company passes the business sector screening, that means if it has operating income less than 5% of its total income coming from any of the non-permissible activity, then that company passes the business sector screening. Once you pass the business sector screening, that company is subject to passing financial ratio screenings as well. A company is considered Sharia compliant for investment by Sharia sensitive investors only if it passes both, that is a business sector screening as well as a financial sector screening. It has to pass both. I repeat, it has to pass both. Okay, if it passes only the business sector screening and fails the financial ratio screening, it is considered non-permissible. Investment in that company is considered non-permissible. That's absolutely clear, and the Sharia scholars are very, very clear on this. So what are these financial ratio screenings? So the first one is a debt ratio, the second is a cash ratio, and the third is the accounts receivables ratio. Let's look at these in detail. I'll slow down a bit over here and I'll take you in detail on the financial ratio compliances. So let's look at the debt one. So the debt compliance ratio is calculated as the total debt of the company divided by the market value of equity. That is, or in other words, the market capitalization of the company. Now, this market capitalization is a 36 months average. It is not today's market capitalization. It is not a 12 months or 1 year market capitalization that Islamicly takes. So the market capitalization that we consider for ascertaining all the financial ratios from a Sharia perspective is a 36 months average. Why 36 months average? Because we have looked at from a daily market capitalization perspective, we have looked at a weekly, we have looked at monthly, we have looked at quarterly, we have looked at 12 months moving average market capitalization, we have looked at 24 months, 36 months, and 5 years. And this data was studied for a 10-year period. We felt that we as well as the Sharia scholars felt that the 36 months average market capitalization is stable enough to account for fluctuations, to account for sudden downfalls, to account for any of the sudden movements in stock prices, and give a stable line for valuing a company. Hence, 36 months average market capitalization is considered. As you can see in these COVID months, in the month of March, there was a sudden fall in the prices of a lot of equities, and then there's a massive jump in the past 3 months. This sudden fall or the sudden increase in the prices of stocks did not affect unusually the number of stocks with change compliance on a daily basis. It did not. So we have seen the usual number of companies on an average change compliances, although the market was going haywire. Hence, 36-month average market capitalization stabilizes the ratios in such a manner that investors can take benefit and have a stable outlook for investing in Sharia compliant equities. So the first financial ratio that we are looking out for is the debt ratio. So from a Sharia perspective, the Sharia scholars say that a company's interest-bearing debt to its market capitalization. So whenever I refer to market capitalization, it means the 36 months average market capitalization should be less than 33%. That means if a company's average market capitalization over 36 months is $100, it should not have more than $33 in interest-bearing debt. If it has more than $33 in interest-bearing debt, that company fails the debt ratio and it will not be eligible for investment by Sharia compliant investors. Okay. Now let us also study what is this debt. Okay. So here I have given out what does this debt consist of. So the first item is, so it consists long-term interest-bearing debt as disclosed by the company's management. So companies usually disclose in their financials long-term assets and short-term assets. Okay, basically current assets and non-current assets, whichever way you like to understand it. So long-term long-term debt is usually things which the company has to repay, not in this current year, but in a long run. That is, the maturity of that debt or the repayment of the debt is not going to happen in these 12 months, but beyond these 12 months. So that is called long-term interest-bearing debt. So we consider the long-term interest-bearing debt as well as the short-term interest-bearing debt. So the debt that the company has to repay in the next 12 months is also considered if it is interest-bearing. The third part is current portion of long-term interest-bearing debt is also considered. Now, what does this mean? Sometime, let's say, for example, in the case of Reliance Industries in India, this company will disclose its debt position in the annuals and after 6 months. But semi-annually, quarterly basis, they will only disclose their income statement. Right? So if we have to figure out what is the current portion, that is the 12-month portion of its debt, which is interest bearing, we do a proportionate analysis basis its last disclosed financials. So that means the current portion of long-term interest bearing debt is also considered while calculating the total debt to be utilized for ascertaining the financial ratio to be used for Sharia compliance. The fourth thing is interest-bearing short-term liabilities such as overdrafts, bridge loans. All of these are considered as well. Now, what do we exclude? Short-term non-interest-bearing operational payables or liabilities such as gratuity payable, that is their employee liabilities, creditors for goods and services in the short run, which is not interest bearing. Provisions which the companies make, which is disclosed on the liability side, but it is not actual debt. We don't include provisions. Again, long or short-term Islamic debt, because it is not a conventional interest-bearing debt, we exclude that. Long or short non-interest-bearing debt, we exclude that. So a debt may not be interest-bearing. Okay, as well as it may not be classified as Islamic debt. it is still excluded because the Sharia committee says that you can definitely take a non-interest bearing debt, not necessarily classified as an Islamic debt, but if it is non-interest bearing, it will not be a part of the threshold. So Islamic debt is not included. Long or short-term non-interest bearing debt is also not included. Lastly, a lot of sovereign bodies give out loans to certain companies. Now, these are usually at a service fee, right? They do not involve interest. Like, for example, in Saudi, in Dubai, that is in the UAE, the government gives out loans to certain large corporations who are involved in greenfield projects or brownfield projects. Let's say if you're an airport developer, right? You need massive amounts of funding for that, because, and then you will need 6, 7 years, 8 years to probably get revenues. Conventional financial institutions may not give you that debt. So the government gives you a debt, or a government body gives you a debt, which usually does not have interest. Okay, it has a service fee. Now, these debts, since they do not have an interest component, are also excluded from the definition of debt. Okay, let's move on. The second ratio that we look into is the cash compliance ratio. Again, the Sharia scholars say that a company can have such amount of cash in their balance sheet, which is not exceeding 33% of its market capitalization. Right? A lot of people come back and say that cash retention in a company's accounts is a good thing. You should, if a company is having more and more cash, is a good thing. But more and more cash to what tolerance limit? Because investment in such companies are allowed from a Sharia perspective, which are doing an economic activity which is in tandem with Sharia principles. So if a company says that I am going to manufacture tires, but it has more than 33% of its total value of the company in cash, that means it is not, that cash is not being used for a productive use or an economic use as stated by the company's management, and the value of the company, the total market capitalization of the company, more than 33% of that market capitalization is coming from pure cash. If it exceeds 33%, Sharia scholars say that the company is akin to currencies. When the rules of sarf comes in, that means a large part of the company's value is coming in from cash, and cash can be traded only at par, but equities are not traded at par. Hence, now this company is considered to be having the quality of a cash business. When I mean cash business, that means that company is not, how do I put it? That company is not considered to be an economic activity as a company. It is considered to be deriving a large part of its value out of its cash holdings. So the rules of trading of cash, which is you can only trade it at par, applies. Now, equity markets do not trade at par. A $10 share or a $1 share, it gets traded at whatever value the market thinks it has, at 3x, 5x, 20x, 100x of that par value, it gets traded at. Hence, it becomes a non-compliant activity at that point in time. Secondly, the ratio, so there's an economic activity filter as to why a company should not have more than 33% of its value in cash. The second part is the Sharia principle that if a company derives more than 33% of its value from cash holding, then it's not looked into as an equity investment activity. It is looked into as a cash trading entity, wherein the rules of sarf applies, which means it has to be done on a par basis and not at a premium basis. Hence, it is considered non-permissible. The third aspect is also the fact that if you have more than 33% of your company's value in cash. Now, cash, I will talk about it in the next slide. Cash does not mean pure cash. It also means marketable securities. Okay? None of the companies globally would keep pure cash. That is a non-interest bearing cash. They will always put it to use in terms of investing it in liquid assets because they would need the money back very, very quickly. This leads to interest generation in the company, which is a non-permissible activity. So to cap that interest revenue to the company, the Sharia scholars have all capped the mother of that source. You get interest income in the company only if you have marketable securities or only if you have invested your money in an interest-bearing account. If you restrict the amount of money that you can keep or invest in interest-bearing activities to 33%, naturally the amount of interest the company earns also gets restricted. Hence, the cash ratio is applied by the Sharia scholars on these three accounts. So what is the cash ratio consist of? So the ratio is actually cash plus interest-bearing securities. Okay, so what all it consists of? So it is considered cash in hand, cash in current accounts, so the amount of money in the bank of the company, in cash deposits, in term deposits, all of this gets interest, short-term interest-bearing securities. So if a company invests in, let's say, for example, an overnight money market scenario, this is also considered in this ratio. Marketable securities, short-term investments held for sale or trading. So if a company is investing in equities, it is also considered over here. Companies investing in government bonds, if classified as short-term investments, is also considered for this ratio. Investments in mutual funds or any other equity funds held for sale or for trading is considered. But all of this should be for a short term. That means it should be current asset. If they are current asset, that means they are akin to cash. Hence, they are considered for this ratio. If a company has invested its cash in an Islamic manner, that means in a murabaha or in an Islamic investment manner, it is excluded from this cash ratio, again with the principle that we are encouraging such investments. Simple as that. Let's move on to the receivables ratio. Now, a lot of people will ask that why is there a threshold on receivables, right? Essentially, this ratio is pretty big, as you can see. So accounts receivables to the market value of equity should be less than 49%. So what the Sharia scholars say is that a company which derives a majority of its value, okay, more than 49% of its value from such activity which it has not realized, okay, it is an economic activity, but the payments for that have not come in. The economic value or the economic benefit of that has not been realized. It is just an accounting entry as of now. It is not recommended to invest in such companies because you're not sure as to why the company has done this activity in the first place, because about 49% of its total value of the company has not been realized, has not been returned in cash, or there's no profit has been booked for this in cash. Hence, the Sharia scholars say that we should exclude these companies who have more than 49% coming in from outstandings of that company. Now, not many companies fail due to this ratio. Now, typically, it is government contractors which fail in this ratio, typically, because they do works for the government and the government takes their own sweet time to pay them back. Hence, although they have a lot of sale, they have a big order book, but their profits have been booked in the company, but it has not been realized. Hence, the Sharia scholars say that if it is more than 49%, then just remove such companies. Okay, so accounts receivables consist of the total receivables as disclosed by the company. It can be classified as non-business or non-trade receivables. It is also considered over here. Any other debit balances that the company discloses. And if a company has invested in the murabahas, so it is the murabaha is actually an accounts receivables contract. We will consider murabahas as well in the accounts receivables ratio. So three ratios: the debt ratio, the cash ratio, and the receivables ratio. If a company passes the business sector screening, that means it has less than 5% income coming in from non-permissible activities, and it passes all the three financial ratios, which is debt, cash, and accounts receivables, it is then considered to be Sharia permissible company. All right. How do you find all the Sharia permissible companies? Very, very simple. Just go to Islamicly App. select the market that you want to invest in. You will get a list of all the Sharia compliant companies. Yes, 20 stocks are given for free so that you can understand the functionality of the app and the level of detail that we give. All the content around Sharia compliant investing is given for free on the app as well as on our website. But if you want to see any stocks of your choice, you will have to unlock it by subscribing to that market. We have monthly plans, we have quarterly plans, and we have annual plans. You can subscribe for only the app, which gives you limited information, but it definitely gives you compliance information. You can subscribe to the desktop version as well, which gives you more details, such as it gives you history of compliance, it gives you the risk factor, it gives you a more detailed chart of how the prices are moving. It'll very soon give you a more detailed analysis of how you can maintain your portfolios over there. It also gives you a couple of widgets in which you can know what are the top performing stocks in terms of the top gainers which are Sharia compliant, the top losers which are Sharia compliant. The web version gives you more detail. So if you're an app user, I invite you to upgrade to the desktop version through the app itself, wherein you can get discounts for upgrading to the app, to the desktop version. The discounts are already built into the pricing if you're upgrading from the app to the web version. If you are a slightly more serious investor, then definitely you will enjoy the desktop version. I recommend that. Now moving on, let's talk about dividend purification. So the percentage of all non-permissible income of the company to its total revenue is calculated, right? So as you remember, the business sector compliance of a company considers that non-permissible income should be less than 5%, right? That means you are going to invest in a company which has some impure income, which has some Sharia non-permissible income, and you're part of that business. This purification helps you eliminate that impure income, making your investment in the equity of that stock to be 100% Sharia compliant. Clear? So dividend purification is the process through which whatever was the less than 5% impure income or non-Sharia income of the Sharia compliant company is removed. Okay, so let us study how dividend purification is calculated and what consists of dividend purification. So the percentage of all non-permissible income of the company to its total revenue is calculated. So here the operative word is all. So it considers operating income, non-operating income, other income, and all sorts of income which are Sharia non-compliant, divided by the total revenue, and you get a percentage. This percentage has to be applied. So this ratio has to be applied on all dividends. I've highlighted and bold and have given a bold font to this, received from the company. So this ratio has to be applied on all dividends received from the company. This amount needs to be purified. That means it has to be donated to charity. This process eliminates all impure income from your investment in that stock. Okay. So essentially, the dividend purification process eliminates all impure income from your investment in Sharia compliant stocks. Now, dividend purification is applicable only on dividends, which is not applicable on capital gains. I will talk about it a little later, but let us see how this dividend purification ratio is calculated. So as I said previously, the DP ratio, that is dividend purification ratio, is equal to all, whether operating, non-operating, or from any source, okay? All non-operating or all non-permissible revenues, whether operating or non-operating, including interest income. So here we account for interest income, okay? Divided by total revenue will give you the DP ratio. So let us see, what does this part mean? So all non-permissible revenue, including interest income. What does this part mean? So while calculating the DP ratio, the below items are taken into account. So I've given an exhaustive list over here. So interest income received from deposit of cash with banks, interest income received from term deposits, interest income received from money markets, any other interest income received, non-permissible income from investments such as equity, derivatives, mutual funds, which are non-Sharia compliant, income from sales of alcohol, income from financial services, income from sales of insurance, income from financial lease, non-permissible income coming from sales of pork, non-permissible income coming from gambling, non-permissible income coming from pornography, non-permissible income coming from sales of tobacco, non-permissible incomes coming from gold and silver sold on a deferred basis, and any other non-permissible income, whether it's actively accruing to the company, passively accruing to the company. Sorry. It's part of it's above the line, below the line, whatever it be. If it is a non-permissible activity and revenue is coming to the company, it is considered for calculating the DP ratio. So all the concerns that people have, that why is interest income not considered while calculating the Sharia compliance of companies? So if interest income is operating in nature, that is if a company is involved in the business of lending and gets interest, it is definitely part of the 5% threshold that we ascertain for finding out whether a company is passing the business sector screening or not. But if a company gets interest income from passive sources, that is, it has kept its operational cash in a bank, that bank pays interest to the company. Whether it is more than 5% or less than 5% of total revenue, it's immaterial. The company will pass the business sector screening. But that impure income from interest from non-operating activity is considered for dividend purification over here, and it is applied on the dividend that you receive from the company. Hence, all incomes that you receive from that investment in Sharia compliant stock becomes pure through this purification process. So again, what needs to be purified? Purification has to happen only on dividends. Capital gains need not be purified. The reason is, when the company gets impure income, out of that impure income, you also get a part when you get dividends. So let's say, for example, the company gets $10 as total income, $2 is impure income, and $8 is Sharia compliant income. The company has passed the ratio as well, and since the non-permissible income is less than 5%, the company has also passed the business sector screening. Now, out of this $10, okay, the company says that 20% we will distribute it to our shareholders. Okay, that means you as a Sharia compliant investor has received about 20% of the company's earnings. In that 20%, there is a proportion which has come in from impure income, which is calculated the way I have explained to you in this ratio. Hence, you need to purify that proportion of the impure income from the dividend that you receive. Why do we not purify capital gains? Is because the Sharia committee or Sharia scholars have decided that using this criteria, a stock is considered Sharia compliant. That means if you trade in a compliant product, okay, all profits from trading activity is considered permissible. Hence, capital gains need not be purified, only dividends need to be purified using the purification ratio. For every stock on Islamically, we give the purification ratio. Okay. Once I finish these things, I will get back to disclosing as to what is purification. How can you purify using the Islamicly app as well as the Islamicly desktop version. Okay. We have we're just about an hour up. Please do keep putting your questions. I will take a good amount of time and inshallah answer all your questions. So keep putting your questions on the chat function over here. Let's move on. A couple of people ask us, why is a stock considered to be Sharia permissible? Okay, when the threshold for non-permissible income is 5%, so how can dividend purification be more than 5%? Okay, so the question is, dividend purification ratio can be higher than 5%? Yes, purification ratio can be higher than 5%. I've given an example over here. So non-permissible operating revenue. That means the revenue in which the company is actively involved is 2%. Non-permissible revenue from an area where the company is actively involved is 2%. Hence, the stock will pass the sector screening. Non-permissible, non-operating revenue. So in revenue from investment activity, revenue from cash deposit, which has given interest to the company, could be 4% of total revenue. So 4 plus 2 is 6%, right? Since operating revenue, the first line item, this one, non-permissible operating revenue is 2%, this should be less than 5% to let the stock pass the sector screening. These two combined can be any percentage. That means if you get dividends of $10 from this company, you will have to purify 60 cents. That is 6%. Sorry, yes, 60 cents. Clear? Let's move on. Let me see if we are getting questions. And yes, we are getting quite a lot of questions. Pretty good. Yes, we are getting a lot of questions. Sounds good. Okay, let's move on. Another question. Purification ratio will be updated annually, quarterly, or when does Islamicly update the purification ratio? So purification ratio updated by Islamicly happens only annually. So I have made a statement over here. So dividend purification ratio will be updated annually on Islamicly app. This is because companies disclose their revenue breakup annually, which helps in ascertaining impure income. Quarterly statements do not give a breakup as to from where the company is getting revenues. It just gives you a performance. That is, total revenue is this, expenses was this, and the profit was this much in the quarterly basis. We do not have a complete breakdown. Hence, we are not able to update the dividend purification ratio on a quarterly basis. So we update it only on an annual basis because annual financial statements give you a lot more detail. The other question is, when do you purify dividends? So when to purify dividends? Islamically recommends that it is best to purify dividends as you receive them. Okay, so if you receive them quarterly or semi-annually or annually, purify it as you get it. That means as soon as you get the money in your account from the company, purify it. Now, which purification ratio should I take? So select the last date of the period and you will get the purification amount on the app or web. I'll show you a demo of this. So essentially, if you got dividends for the period of 1st January to 31st of March of 2020, let's say it's a quarterly dividend, you got it somewhere in July or August in your bank account this year. Select the last date of the quarter or the period that you got the dividend for. That is 31st of March. Let's say you got dividends for the full year, which started on 1st of January 2019 and ended on 31st December 2019. Select 31st December 2019 as the date for purification. Okay, and you will get the answer as to what the purification amounts are. Simple as that. Okay, I'll give you a demo of that as well. Now, once I find out what is the purification amount, what do I do with it? Okay, so whom to give this purification amount, right? You can donate or purify this amount by giving it to anybody, any charity that you deem fit. So there is no criteria to tell you who is eligible for this donation. Okay, this is not considered part of zakat. This is not considered part of your sadaqah also. Okay, this is not considered part of your fitrah as well. So this is absolutely an amount which was not supposed to come to you. It is completely impure. Hence, you want to give it away. So you can give it to anything or anybody that you think is the right person for it. The other question is, can I deduct transaction cost and tax amount on purification amount before donating it? So you got a dividend of $10. Because you got dividend of $10, the government is going to tax you on that $10. Right? If you apply purification ratio on $10, That means you will have to purify some amount as well as pay taxes on an amount which you did not utilize. You got my point? That hence you can proportionately deduct the transaction charges and taxes on purification amount before donating the balance amount. What I mean to say is, let's say you get a dividend of $10. Out of that, let's say you need to purify $2, for example. Okay, so taxes on $2, transaction charges on $2 can be removed. Okay, and the balance can be donated. Let's say you have a 30% taxes on $2. That would mean 60 cents. Okay, so 60 cents will go to the tax guy. You are now left with $1.40. $1.40 need to be purified. You don't need to purify $2. Now, for selling this, you are charged 10 cents. Okay, or for receiving this dividend, you are charged a proportionate of 10 cents on this $2. So deduct that 10 cents. So 60 cents of taxes, 10 cents of transaction charges, whatever that may be levied. You're left with $1.30. $1.30 need to be purified. Clear? I will get into a little bit of more examples as we go in, but let's also study a little bit about the Sharia scholars behind Islamicly. Okay, so Islamicly has the most renowned Sharia scholars board. The Sharia scholars board is in-house. That means we work in tandem with the Sharia scholars. I'm not saying the Sharia scholars sit in the research office that we have. No. If we have a query regarding the compliance of any stock, we get in touch with the Sharia scholars and we get an answer back. That is what we mean by in-house to Islamicly. All emerging issues of compliances are discussed with the Sharia Scholars Board. So we go back to the Sharia Scholars Board and ask them what is the compliance of a particular stock if that rule or that process has not been discussed in the past. Now, in terms of Islamicly research team has 20 years of experience, alhamdulillah, in doing Sharia compliance screening. Hence, the amount of effort that gets into this, the amount of the level of Sharia scholars that we have, the process that we have should give you a reasonable amount of assurance that if Islamicly has given a compliance rating, it has done it with utmost care, utmost due diligence, under the guidance of the best Sharia scholars, and they themselves have more than 20 years of experience in doing this. These are our scholars. We're very blessed to have these scholars who are the pioneers and one of the most well-respected Sharia scholars in the world. Let's study the profile of our Sharia Committee chairman, which is Dr. Muhammad Ali Al-Ghari. As you can see, he's a PhD in economics from the University of California. A lot of people also ask why Islamicly criteria is different from AOFI criteria. So let me also say, our scholar, our chairman of our Sharia Scholars Board, is an integral part of AOFI as well. He is one of the board of trustees of AOFI, as well as he's a member Sharia Standards Committee for the Jeddah chapter of AOFI as well. Apart from that, he has been part of the Sharia board, so you can see the last line, in National Commercial Bank, which is one of the largest Islamic banks in Saudi Arabia. City Islamic, again a bank in the West, which is a Western bank established in Saudi Arabia. Saudi American Bank, UK. Saudi British Bank from UK. Dow Jones Islamic Index, which is one of the biggest, one of the 4 large stock index providers in the world. He's also the chairman of the S&P Sharia Index, which is the largest Sharia index in the world and the most popular Sharia index in the world. And we work directly with him, alhamdulillah. This is the certificate that the Sharia board has given to Islamicly. It is available on your app as well in the profile section. You can have a look at it. There's a video as well of what the Sharia scholars say about Islamicly. You can see it on the app as well as on YouTube. I'll play it a little bit out here. You can see the video will play in a bit.
Alhamdulillah. نحمده ونصلي ونسلم على سيدنا ونبينا محمد وعلى آله وصحبه We're pleased today to be shown this new app, Islamicly, and we found it really very useful. It's going to be a milestone in the dissemination of the Sharia-based information about life in total. Now they started with the equity criteria, and the content of this app is really extremely useful to everybody who's interested in investing in equity. And inshallah, it will grow to become really useful in all aspects of life to help Muslims cling to their Sharia.
Sounds good. You can have a look at this video on our YouTube channel. We're very, very thankful to Dr. Muhammad Al-Ghari for having supported us for all of these years, being the one of the largest, one of the biggest names in the Sharia industry in terms of Islamic finance, and more specifically in Sharia Equity Screening. We're very blessed to have him, and such kind words coming in from him for us makes a lot of difference to us, and should give you, the users, the credibility that you need to trust Islamicly as your screening provider to help you out in your Islamic investment journey. That brings us to the end of our slides. Now I will also share with you that there is a video on the Islamicly YouTube channel which will take you through how the purification can happen on the app. Let's look at that video. So on the app, if you click on the stock tile, it will flip and you have a purify amount, the bottom left, this one. You select the date, as I said, for the quarter or for the period that the last date of the period that you got the dividend for, and you input, you get the purification ratio, as well as you get the purification amount. So it's $14. I'll just bring you back. It's going too fast. I'll stop it here. So this will, so green means, so out of the $1,300 dollars or rupees or ringgits or whichever currency you have inputted in with dividend that you received, $14 or 14 ringgits or whatever was the input currency needs to be purified. So 1.07% is the purification ratio. The purification amount is 14. That means 14 needs to be purified and 1286 can be retained. It's as simple as that on the Islamicly app. You may donate that amount to a charity of your choice. Simple as that. Download the app and enjoy the benefits. In addition to that, there is a blog that we've written about dividend purification on the Islamicly website. So it's blog.islamicly.com/purification. You can see this same article which talks in detail about dividend purification and looks at a couple of more issues in detail for a more elaborate reading. This is also available on the app in the article section. All right. Now let's look at how can we do the same thing on the web. Okay. So this is the web portal that we have. Let's say I go to the universe. I can see all the stocks which are compliant or non-compliant. Let's say I select the US market, which is the most popular market on our app. United States. It will give you all the stocks in the United States and the Sharia compliance. It will give you today's changes. So about 11 stocks have changed compliance today. It has 5,200 stocks are what we cover as of now. You can see a list view as well. If you want to follow any of the stocks, you can follow. So let's say I want to follow Amazon. I click I'm going to follow it. If you want to filter it, there are a couple of filters over here. So top losers, top gainers, and stuff like that. And let's get into viewing that stock. Now, since Amazon is non-compliant, you can't purify that. So if I click on this, it will say, since the stock is non-compliant, investment in this stock is non-permissible. Hence, this function of purification is not applicable. That means you were not allowed to do investment in Amazon. Hence, the question of purifying it does not arise. So let's try and look at some other stock. Let's go back to the universe. And again, let's back to United States and load that. So let's see another popular stock called Facebook or Apple. Okay, let's look at Microsoft. It's Sharia compliant. Let's look at the purify option, and let's say I want to purify. Let's put it any date, as I said. I want to purify $100. Confirm, and the purification ratio is 4.3%. That means you need to purify. Just make it smaller, and you get it. So dividend amount is $100, and you can retain 96%, and $4 is what you need to purify. To be precise, 4.3% is a purification ratio. Cool. Let's look at the dashboard out here so that you get some ideas since we're already here. It gives you a lot of functionalities. Like, for example, if your market is Canada, it will tell you the top 5 Sharia compliant gainers in Canada. It will tell you top 5 compliant stocks in that market. Let's say Canada, the top 5 Sharia compliant stocks. It will tell you top 5 Sharia compliant stocks, top 5 losers which are Sharia compliant in Canada. It will give you that thing. It will instantly alert you as to what has to be done. In addition, let's say, for example, this feature will also tell you what stocks are non-compliant. If you can see in this one, which stocks are non-compliant. If I get into any stock, if I can see more details as well in a line view as to why stocks are what stocks are non-compliant. It's taking some time to load from there. Let's get to the universe and come back again. While it loads, let's see, are we getting questions? Yes, we're getting questions, and we have about we have about 40 minutes to answer these. Inshallah, we will do that. Okay, it's taking too much time. So I think we've covered mostly everything over here. So let me stop sharing my screen and come back to the questions. All right. Okay, the first question I'm going to take is from a person called Ulfat. Assalamu alaikum, wa alaikum salam. I am from India. Kindly tell the rulings on commodity trading, especially gold and silver. I want to know if it is permissible to buy gold and silver through stock market. Buying gold and silver through the stock market is definitely permissible. As of now, we do not cover any of the gold ETFs or any of those things. If, as I've given you the ruling, if it is done on spot basis, if whatever you're trading is being done on spot basis, and you are satisfied that the entire fund, which is run in a Sharia compliant manner, and it has Sharia certification, go ahead and invest it, as long as it is done on spot basis. I cannot tell you which security is Sharia compliant over there, because we do not cover anything apart from equities as of now. Okay, Brother Wasim has asked a question. Can we have info from how many years the stock is Islamic? Yes, on the desktop version you can get that. Let me see. So on the desktop version you can see the historical compliance. I will try and pick that up for you, and I'm going to share my screen as soon as that gets loaded. I'm reloading my screen and I'm going to sign up. Let me start a new browser and then set that for you. I'll share my screen so that you can have a look as to how we can log in also. So you can come on the Islamicly website. On the top right, you have the login option. This is my login and I sign in and I have signed in. Okay. Now, for example, a classic case is a company that we're looking very recently is this one, Mirza International. As you can see in this, the green part means the compliance periods. The red part is a non-compliant period, and the green part is again compliant. So as the trading rules say, once the stock turns non-compliant, you have 30 days to wait it out whether it turns back to being Sharia compliant. Over here, due to market cap fluctuation, it had become non-compliant. And once the market cap started moving up again, it started becoming compliant. That means it's just borderline at that point in time. Now it's fine. Now, if you want to see this in a list view from an exact date perspective, you can click on view history and it's going to load, right? So as you can see, it was compliant till the 21st of July. The 22nd of July, it became non-compliant because as you can see, there's a non-compliant rating over here. It remained a non-compliant for 1, 2, 3, 4, 5, 6, 7, for 7 trading days, okay? And then it again turned compliant. Right, you can see this in a list view on in this thing. So historically, how it was compliant, you can keep scrolling down and you can see. So we have data going as far back as it was the coverage was initiated. So for this stock, as you can see, we have data from 2016 as well. I can go down to 2016 as well, the compliance status. So if you want to see for your existing portfolios, if they were Sharia compliant when you actually bought it, okay, then you should definitely subscribe to the desktop version, and you can figure out if you had actually subscribed to a stock when it was compliant initially. It might have become non-compliant now, so you don't have to purify everything. You just have to purify from the time it became non-compliant till now. So this is the functionality that I'm talking about in the desktop version, which is a very, very useful functionality. So I've given you a demo about that. Let's move on. Brother Azjad is again asking this. The question is on the same line that please explain briefly about gold ETF in Indian Stock Exchange regarding Sharia compliance. If that gold ETF is certified Sharia compliant, then you can go ahead and invest in it. As of now, Islamicly does not endorse or tell you which ETF is Sharia compliant because we do not cover it as of now. Inshallah, we will cover it soon, but we need to give preference to other functionalities before we get into that. Asif Ahmed says, can we trust the list of stocks listed in the Nifty 500 Sharia? To trust any Sharia compliance list, there are a couple of things that you need to do. You need to see if they have a Sharia board, how frequently they are updated. You need to see who is the Sharia screening provider. You need to go ahead and find out if they are credible, if they are transparent, if they have a functionality, and then you compare it with Islamicly, right? Islamicly gives you the entire, covers about 7,000 stocks, covers about 1,900 stocks in the Indian market, and we update it on a daily basis. So you can see the compliance of that Nifty 500 Sharia compliant stocks and come and check in Islamicly. If there's a difference, you ask us why there's a difference. If you trust the service provider behind that definitely is trustworthy. Then if you don't trust the service provider, then you can come here to Islamicly. Brother Asir Ahmad is asking, will Islamicly expand its services towards mutual fund? Inshallah, why not? Inshallah, we will. But we have a couple of more features. We need to make our app even better. We need to bring a couple of more features on the desktop version before we move out into other products. As of now, we do only equities. Muhammad says, please share your view on scalping, buying and selling same day on Nifty. I'm not sure what you're referring to, but if you're buying an equity stock and selling it on the same day, it's definitely permissible. There's a blog on our website as well as on the app in the article section, which talks about day trading. What are the rules for day trading and what is permissible and what is not. Essentially, if you buy first and sell later, it's Sharia compliant. But when you buy, you can sell only at that point in time when your broker's conditions are satisfied that you are the owner. Do not confuse this with delivery. Delivery is a technical thing which takes T+2, T+3, T+4. Not sure about that. But if you have paid the money and you got a confirmation from your broker that this trade is executed and that stock shows in your positions or your holdings, and you got an email confirmation or an SMS confirmation or whatever your broker tells you, that when you will be notified that your trade is executed and you will now become the owner of that stock, you can go ahead and sell after that. That is Sharia compliant. But the Arshad said is read especially Embassy, Office Parks and Mindspace Sharia compliant. For finding out Sharia compliance, you will have to subscribe to the app and figure out whether they are Sharia compliant or not. For Mindspace, we have given out a free report so that people understand the credibility that we have, the processes that we follow. So there is a report on our app which will tell you as to whether Mindspace IPO is Sharia compliant or not. I'll just bring it up for you so that we can have a joint look at it right now on the blog section of Islamicly. Yep, I'll share my screen now. Do have a look at the article sections. Okay, we update a lot of content over there, a lot of content. 3-4 things are getting updated on a weekly basis, and all of this is for you, so that you don't have to ask us these questions. So Sharia compliant status of Mindspace Business Parks REIT IPO. Okay, it is not compliant. Okay, the DP ratio is 27%, although this is not be shown on the Islamicly app because it's non-compliant. I have given the screening over here as to what does Mindspace do, what is the tricky area for Mindspace. The entire screening is done. So this is the sector screening. Let's say it fails the sector screening. This is the non-operating income of the company, the dividend purification ratio calculation, the financial ratio screening, and the overall conclusion that it is Sharia not compliant. So this should give you a lot of understanding as to the level of depth that Islamicly goes into in finding out whether a company is Sharia compliant or not. Regarding Embassy, do go on the app and find out whether it's Sharia compliant or not. Muhammad Firdaus bin Muhammad Puziz is asking, what is your opinion on contract for difference? I have said in my previous webinars as well, almost every scholar, including the top most respected Malaysian scholar, says that contract for difference, even if the mother share is Sharia compliant, the trading contract or the trading activity which is classified as CFD is Sharia non-compliant in the true sense. I'm not saying this, the Sharia scholars have said this, that CFD is Sharia non-compliant. Brother Adam says, Salam, will these slides be shared somewhere in case we miss parts of the presentation? The entire webinar will be available as a video recording on Monday, inshallah. Subscribe to our YouTube channel where all of this gets updated. Brother Shafi says, then how come DMart supermarket is Sharia compliant? They may sell cigarettes and alcohol. Yes, they may sell cigarettes and alcohol, but the revenue from cigarettes and alcohol is less than 5%. Brother Muhammad again asked, CFD trade allowed? Is the same answer. It's not allowed. Sayyid Nawaz says, what is the hadith or fatwa that decides the threshold of 5%? The hadith or the fatwa which says the fatwa is definitely given by a Sharia board that less than 5% is tolerable. As I explained again, it doesn't mean that it's tolerable, it's fine. It is tolerable to ascertain it's Sharia compliant, and it is again removed from the earnings of the stock if you get a dividend. So it doesn't mean that your earnings have a portion of non-permissible income. If the company gives dividend, it is purified, it has to be purified. We spoke about that as well. What it also, the basis of this, what the Sharia scholars tell is that if something is negligible, okay, it does not affect the majority of the activity. Okay, that means if a company has 2% revenue or 4% or less than 5% revenue from a non-permissible activity, it does not mean the entire company is doing that. Okay, the majority of the activity still stands. Hence, the 5% threshold has been fixed. A couple of other Sharia scholars say that instead of 5%, let's do 3%. Some other Sharia scholars say 2%. Some scholars say 10%. But 5% is a consensus that has emerged in the past 15 years. That if a company is getting less than 5% income from a non-permissible activity, it is tolerated. Okay, Aisha is asking a question that the current portion of long-term interest-bearing debt, sometimes companies disclose in their annual statement that they have this much of amounts in 12 months payable, this much of amount in 24 months payable. And in the next 6 months or every quarter, they don't disclose that. So what we do is we assume that 3 months have passed. So some part of the amount which is payable beyond 12 months will be now current. So we proportion that and take it. So there's a formula to it. And all of these are proprietary things that Islamicly has developed to ascertain the debt which has to be utilized for calculating the debt ratio of a company. You don't really have to worry about all of these things because Islamicly does this for you. We are professionally engaged in this. This webinar is for people to get assurance that Islamicly knows its stuff. Islamicly has looked into these things, and to give you assurance that, or a basic idea as to how these things are done. Farhan Mir has asked a question that TCS an IT company serves for banks, is it allowed? There's a huge discussion on the app under the TCS talk where we have answered this many times. So please we'll have a look over there. Essentially, the principle over here is what the Sharia scholars say. If you provide a software to a bank, okay, the essential question you need to ask is, can the same software be used to provide services for an Islamic bank? And the answer is yes. That means this software has not been designed specifically for that bank. This software can be used for an Islamic bank, and there are examples. The software that TCS has designed for a conventional bank in India, that same software is used by an Islamic bank as well. That means if a product has an alternate Islamic use and is not designed specifically and can only be used for a non-compliant purpose, that revenue will be considered permissible. And hence TCS revenue from giving software to a bank is considered permissible. Brother Adam is saying, what's the best way to find out such calculate 36 months average market capitalization? The formula is given out in our on our website in the Sharia screening criteria section over here. As you can see over here. For the market cap, this place. So the entire formula is given, so you can apply the formula and do it. We rely on third parties to give us this data because they are the experts in calculating this data. So Islamicly relies on third party to give us this 36 months average market capitalization because it's a mathematical number. We really don't have to break our head over this. We just do quality audits to ensure that the numbers are correct. Farhan Mir says, what about investing in mutual funds, including non-compliant sector, but after withdrawal of amount, can we exclude that profit coming from non-compliant sector? How will you know? Mutual fund investing in 10 stocks, okay? How do you know that your return that you got is from those 2 non-compliant stocks? Apart from that, mutual funds do a lot more other non-compliant things. Let's say, for example, they have a cash balance. The market is crashing. They don't want to invest now. They take the money out from the market and then they put it in cash. That cash gets interest. From that interest, you also get your return also is coming from that. Essentially, this is not allowed. If a mutual fund is not Sharia compliant, you cannot invest in it. Farhan Mir says, from where did you get all this information? We base our information. Nothing of what I tell in any of my webinars is my information. Everything has been discussed with the Sharia board. Alhamdulillah, we have been working with the Sharia board for the past 20 years. We've had hundreds of Sharia board meetings. It is the decisions of Sharia scholars. I have discussed the Sharia scholars' profile. It is their view, which they have derived from being in this industry for more than 30, 40 years and sitting on hundreds of asset managers which are Islamic and discussing these issues day in and day out. And that's the knowledge that we have. Alhamdulillah, we have been fortunate enough. And through this Islamicly platform and through this webinars, we are disseminating it for free for the benefit of you and to give you a practical utilization of this knowledge and this information. We have developed the Islamicly app and the website and the web platform for you to get benefited from real-time, absolutely credible Sharia compliance information to help you invest in a Sharia compliant manner. Again, Muhammad Firdaus bin Muhammad Puzi says, so if I obtain profit from closing a trade, I do not have to purify the profit I obtained. No. What you mean is that if you get a capital gain, you don't need to purify it. Wasim says, is government bonds in India permissible to invest? Government bonds are Sharia compliant? No. Government bonds in India give you interest, which is akin to conventional interest. It is non-compliant. Again, Muhammad is asking, if I have invested in 4 stocks thinking it's Sharia compliant, but then I came to know it is not Sharia compliant. Now I want to sell them, but 1 stock is in profit. However, 3 are in loss. Can I recover my loss from the profit of that 1 stock and give remaining profit to charity? No, you cannot do that. Every stock is a different contract. Okay, you invested in 4 stocks. Okay, all 4 of them are non-compliant. 1 is in loss. The 3 are in profit. Okay. Rule number 1. As soon as you come to know that these stocks are non-compliant, you have to sell them within 7 days. Okay, you don't mind selling these 3 stocks because they are in profit. So you should sell these 3 stocks within 7 days. Okay, any profit that you made in the period that these stocks were non-compliant, you have to purify. Okay, so what you have to do is you should subscribe to Islamicly Web. You will get the historical compliance of these 3 stocks. So you can find out whether they were non-compliant when you invested in it or they became non-compliant later. Okay, so if you invested in these stocks when they were compliant, you can retain the profit that you made till the time they were compliant. From the time they were non-compliant to today's date, only that much you have to purify. Got it? And you have 7 days to do that. Now the problem is of this 1 stock which is in loss. Okay, you Sharia scholars say that if you did not know when you were investing in this stock that they were compliant or not, and you find out that they are non-compliant, and you're under a loss, you can continue to hold that stock till the time you retain the original buying price, that is your capital, and sell it immediately. That means you have not made any gain from a non-permissible activity and you are entitled to recover your capital. In the small differential if you make of a profit while doing this activity has to be purified. So yes, you can wait for this stock to recover. Okay, for this stock to recover, its original investment price, but the gain that you made from investing in these three non-compliant stocks has to be purified. So instead of blindly going ahead and purifying it, okay, the best thing to do is go on Islamicly web, see the historical compliance, and take that chance that it might be that they may be compliant from some point. So your purification ratio will come down, your purification amount will come down. Farhan Mir says, I have invested in different mutual funds. Few were non-Sharia compliant. Due to market collapse, I booked loss. Can I cover my costs from order non-compliant funds? And once I recovered my loss in the original amount, I will exit at mutual fund. No, not allowed. If you made a loss from a non-compliant activity, you can't recover it from doing another non-compliant activity and then you say, I'll stop it now. No, you can't. Okay, very good question. Osama says, could you please explain how some of the biotech companies such as Milestone Pharmaceuticals Inc., MIST, are considered compliant? How do you calculate purify option on the app? It shows that 100% needs to be purified. Very good question. I have answered this in this webinar itself. That means purification ratio can be more than 5%. Okay. The classic example of this is also very comparable to a very detailed article that we've written on biotech companies on the app called Moderna. Okay, Moderna has zero business income. That means its operating income is zero. But what does the company do? The company is into mRNA technology, which is Sharia compliant in the sense that they're into medical research. They are into manufacturing vaccines or manufacturing cures or manufacturing medicines or medication in the pharma industry, right? Or it's a biotechnology company which is coming up with research which is going to improve healthcare for humans. So it's a business activity which is Sharia compliant. But from that Sharia compliant business activity, they have not got any revenue because they are not yet commercialized their research. In the meantime, they have got funding and they've kept this funding in investment cash. Because the market value is so high, it passes the cash compliance ratio, but this cash earns them interest, and that is the only income that the company gets. Okay. In the case of Moderna, they got about 39% of the total income from interest. Okay. But since it is non-operating in nature, it is not considered for sector screening. But for purification, all non-permissible incomes are considered. Hence, this interest income, which is non-operating in nature, is also considered, and that comes up to 39%. In the example that you have given, it must be something very similar to that. That means the company gets zero income from operating activity, and the operating activity is compliant. Hence, the company is past the sector screening. All the monies of the company is kept in cash as of now. And the company would have passed the financial ratio because the market cap of biotechnology company is quite high nowadays. Hence, it has passed the cash compliance ratio, but all its actual incomes will be coming in from interest on these cash deposits. Hence, if you get a dividend from this company, you will have to purify that dividend 100%. Very unlikely, because the company which is not making operating income will not pay you dividends. More likely not pay you dividends. Most likely it will not pay you dividends. But if you trade in that stock and you make a capital gain, you can definitely retain that capital gain. You don't have to purify it. That's the rationale. Wasim is asking, is it permissible to invest in tax-saving mutual fund? Any mutual fund which does not have a Sharia certification to it is not permissible for Muslims to invest in. Muhammad Firdaus bin Muhammad Puzi is asking me a question which is which I don't think I can answer. He says, may I use a sadaqah that I did before that had the same value as a Sharia non-compliant profit that I made after the sadaqah as a way to purify my wealth? Muhammad, I am not a Sharia scholar to answer that. You will have to probably ask a Sharia scholar of whatever meager information or knowledge that I have about such things. Everything depends on the niyat, right? You can't replace the niyat. On 1st of January, you have donated $100, okay, as sadaqah, with the niyat of like Allah, that may Allah give me sawab, and that's done. Now you realize that I need to purify $100 from my investments, okay, and you're saying that, can I replace my niyat of 1st of Jan? I don't think the scholars will agree to that, but I am not a scholar. You need to ask this question to a Sharia scholar, any imam of a masjid or whichever Sharia scholar you think you have access to. You can ask them. I don't think, from my personal non-Sharia background, non-Sharia scholar opinion, it looks to me that you're replacing the niyat. That's my view on it. Which is a non-Sharia scholar view. I'm repeating myself. You need to answer. You need to ask your local imam or a local Sharia scholar about that. Brother Shafi says, if the company turns to non-compliant, I have to sell immediately or exit. Brother Shafi, there is a blog on our website which talks about trading rules. Essentially, if a stock turns non-compliant, you have 90 days to sell that stock. The first 30 days you can wait and watch. If the stock turns compliant, it's well and good, you don't have to do anything. But if it continues to remain non-compliant, you now have 60 days to sell this out. Any capital gain that you make from the 31st day till the time you sell the stock has to be completely purified. Any purification, any dividends that you get from the 31st day till the day that you sell has to be completely donated, not purified, completely donated. Any dividends that you get from the date turn non-compliant till the 30th day has to be purified using the purification ratio given on the app. Brother Farooq says, is there any option to change the background color in a desktop version or any other? I'm not comfortable with black background. Inshallah, all these cosmetic changes will come up once we finish giving you the essential functionalities. So the next functionality which is going to come up now is these changes in the holding section, which is going to come up inshallah very soon. After this, we have a couple of more interesting functionalities that we're going to publish. But I'll take this as a feedback to my development team, and if it's something that is doable quickly from a design perspective, we'll look into it. Okay, let me quickly go ahead and finish the questions. It has been an hour and 48 minutes already on this webinar. We should definitely finish this in the next 12 minutes. We don't want to extend beyond the promised time. Assalamu alaikum. What should I do if I am invested in a non-compliant share and I have got some dividend? Like, for example, Hindustan Zinc, which is passing in 3 criteria and failing in 1. Okay. Whether it passes 1 or 2 or 3 or 4 criteria, whatever, if it is classified as non-compliant, means you cannot invest in that, first of all. Okay, if you got dividend from a non-compliant company, you need to donate the entire dividend. Secondly, you need to exit that stock immediately. You have 7 days to exit that stock. The entire gain that you made on that stock has to be purified. Now, figure it out, because I think the company that you're talking about may not be non-compliant from day 1, because it looks like it is failing one of the financial ratios. It might be so that when you invested in it, it was compliant. So do subscribe to the desktop version and check the history and find out whether you do purify the entire thing or you can save up some gains. Farooq Faz has asked a question. In debt ratio, which amount to consider for debt? Is this also average of 36 months? No, debt is as on that date. So if I'm taking the quarter number then it will be for the end of that quarter. All debts or all balance sheet items are as on date. So we take that. So it is as on date. Divide by the moving average. So what is the moving average? It is just the value of the company. Do we take today's value or a more stable value? That's it. But debt is today's debt. It's an absolute number. So it's the date of that period ending divided by the moving average value of the market capitalization. Debt is not averaged out. Wasim says, in app version, can we see history of stock compliant year data? No. This feature is a premium feature and is available only on the desktop version. Syed says, are following Sharia compliant Bitcoin, Bitcoin Cash, Bitcoin Gold? If they have a Sharia certification to it, they may be. If they don't have a Sharia certification, then I don't know. I haven't looked at these things. So, plus Islamicly doesn't cover anything apart from equities as of now. Farouk Faz again, our supermarket generate revenue from all products, permissible or non-permissible, like pork, alcohol, tobacco. How do you find a proportionate sale from non-permissible product from financial statements of the company? Yes, we either find it out from the financial statements of the company. If it is not disclosed, we write to the company managements and we get a response from the company managements. Thirdly, due to our extensive experience in doing Sharia screening, we have built our proprietary models as to what countries have what proportion of revenues, and we utilize that because yes, there is a certain amount of estimation that we have to do for such things because information is not classified adequately. So we do our best. The first thing that we want to do is to rely on what the company management says. So we get in touch with the company management and get a response from them, and that's how we classify companies in supermarket. Like for example, Walmart, we've done that. Wasim, can we invest in ethical mutual fund which picks from Nifty 500? Again, if that mutual fund has a Sharia certification, go ahead. And you trust that Sharia certificate, you trust those scholars, go ahead. We have not reviewed it, so Islamically, as an official statement, we cannot give you an opinion on that. Naeem says, can I pay tax from the profit I got from non-compliant stock? No, you cannot. Tax is a statutory liability which you have to discharge. You cannot pay tax from a non-permissible income. This has been discussed with the Sharia committee and they are very clear about it. Apollo Tires is a non-compliant stock in Islamically, but it is compliant stock in Nifty 500 Sharia. Should we sell or hold the stock? You need to follow one service provider. If you're following the Sharia criteria of Nifty 500 Sharia, follow that. Okay, if you're following Islamically, then you follow Islamically. First, ascertain the trust. First, ascertain which is better in your opinion. First, see which is more reliable, which is more updated, which is more trustworthy, which is more transparent, which has better scholars, which has better research team, which guys might have done a better job. I am not here to tell you that. I'm just giving you examples I'm just giving you pointers as to what you need to look into to decide all of these things. Decide that and be on one side. Okay, do not take compliant stocks from Islamically and things which are not compliant in Islamically but compliant in Nifty. Go ahead and invest in that. No, don't do that. Sharia scholars say use one rule book and follow that rule book. That's it. Syed says we can hold a stock which turned to non-Sharia for 90 days, right? What if it turned back to Sharia compliant on 89th day? Very, very simple. 31st day to 89th day, whatever is the capital gain that you get has to be purified. If you purify that, you can continue to hold it. That means the capital gain that you got between the non-compliant period has to be purified. Someone asks us, can we average out the loss and then exit at no loss? If you are trying to offset profit from one, loss from one, and you're trying to offset, it's not allowed. You have to do it individually. Okay. Muhammad Firdaus is asking, how about companies based in Israel and is there Sharia compliant? Are we allowed to invest in them or is it just down to our principle of opposing the Israelis? What do we do with profit we obtain if it is not permissible? If you see on Islamicly app, companies which are in Israel are, and if they pass the Sharia criteria, they are classified as compliant. Just because they are in Israel does not mean that they'll be non-compliant. Just by virtue of it, the Sharia board, the Islamically Sharia board believes that Muslims should be permitted to invest in these stocks, and because it's a question of principle, if you become a majority shareholder in that stock, you can get your voice heard and ensure that the profits of that company are utilized for expanding the company and not for any other use. The concerns that you have, the original concerns that you have about investing in Israeli stocks, they are taken care of. Hence, if you blanket tell people not to invest in Israeli stocks, then you're completely isolating yourself from that ecosystem. Hence, the Sharia committee says that even if a stock is in Israel, if they pass the Sharia screening criteria, you are allowed to invest in them. What is the difference between trading gain and capital gain? There is no difference. It's inter alia. When you donate purification of dividends, are you able? Ryan is asking this question. When you donate purification of dividends, are you able to count this as part of zakat or just as a sadaqah? I've already answered this question. Purification amount that you have to donate is neither part of zakat nor is it part of sadaqah. It was it was impure income which accrued to you, and it was an income which came to you, and you were helpless about it in the sense that you could not stop it coming from you. Hence, when it has just come to you, you're just removing it. So it's not part of sadaqah, it's not part of zakat. Cool. We have reached the end of all the questions. I hope you have enjoyed this session. I hope I have been elaborate enough. I hope I have been clear enough to give you a good understanding about Sharia screening. Today we did a recap of the business sector screening, and we covered in detail financial ratio screening, and we did a good amount of time spent on dividend purification. Now, given this, I hope you have the confidence to subscribe to Islamicly. Please do subscribe to Islamicly. It will go a long way in helping us grow further. We are absolutely dedicated to providing you the most updated compliance information. Brother Wasim is asking, capital gain don't require purification, and everybody else has answered that. That means you got what I said. Yes, you do not need to purify capital gains. Please do read the blog that we have on dividend purification. Please do subscribe to Islamicly. We are coming up with a lot more features in the future, a better designed app as well in the future. Our desktop version has a lot more features. For people who are only on the app, can upgrade to desktop version, and you get an inbuilt discount on the app itself. And if you like what we are trying to do, okay, I can see a lot of people saying good things about us. Thank you, I'm humbled. But can you tell it to the world by putting up a review on the app stores? We really need it. If you like us, if you think that we are doing something good, please do review us on the app stores. A short review is also good. Just click the stars that you wish you need to give us. We really need your blessings and prayers through reviews put on the app store. Do review us on the app store. If you're not subscribed, subscribe to our plans. They start as low as $6 a month. You don't have to go for the annual plans if you don't think, if you're a new trader, just start basic. Start subscribing to the app on a monthly basis, right? And for the more advanced users, for people who have existing portfolios, you can upgrade to the desktop version. I hope all the 100 people who were there today on the webinar will give us a review on the app stores. We really need it. We're doing all of this to give you transparency, to give you confidence that Islamicly is a credible, professional, institutional level organization which knows its stuff, has a Sharia board backing it, and is giving you all the information and is transparent about answering your questions. With this, I end my webinar. Next week, we're going to do an exciting webinar where we are going to compare all the Sharia criteria in the world and tell you the differences between them. Do attend that, which will give you an understanding as to why there are differences in screening now between Nifty and Islamicly, between Islamicly and AOFI. We will answer all those questions as well as give you some reasoning, some logic which the Sharia scholars have given us as to why these differences exist. So I'll inshallah see you next webinar as well. Assalamu alaikum wa rahmatullahi wa barakatuh. And I look forward to a review. Go to the App Store right now. It will take you 10 seconds to give us a review. We really need it. And if you really like us and you trust us, subscribe to our YouTube channels. Look us out. Look out for us on our Facebook pages, on our Instagram, on our LinkedIn as well. You get a lot of information over there. Look at our blogs. And at the end of it, subscribe or buy the subscriptions on the Islamicly app or the desktop version. We are here to give you the most updated Sharia compliance information. Assalamu alaikum wa rahmatullahi wa barakatuhu. Thank you.